Good morning, everybody. Hey, welcome to Thursday. It's unemployment day, February 4th. Hope that your week has gone well as we're kind of winding down this week. Unemployment today. The official unemployment number comes out tomorrow. So we got some stuff to talk about. And of course, we always have a few things in terms of earnings coming through. But the other thing I want to mention is that yesterday was a mixed day. Dave will talk about that. Not a big up day, not a big down day, but hey, it was at least mostly in the green. So we'll discuss that and more when Dave joins us. But first, remember, I'm a big proponent of making sure that you know how much risk you have in your portfolio. And why do I focus on that? Because the folks that I see, and we see a lot of people over the years, and most folks don't know how much risk they actually have in their portfolio. They think that it's a conservative portfolio or it's a moderate portfolio. And when we actually measure the risk inside that portfolio, a lot of times, more than 50% of the time, it is not what they thought it was. Folks, I don't want you to be in that situation should we have another market downturn. Give me a call and let's walk through our financial x-ray. 863-382-0037. That's 863-382-0037. Hey, Dave's coming up next.
Oh, fine. Light FM and Kenny Loggins there. Good morning. It's 8:41, 19 before 9. This is the busiest day of earnings season for this quarter. There's over 200 reports that are coming out today on the stocks that get traded on the exchanges, and federal government did a data dump for us too. So let's get right to it and go downtown, check in with Phillip Statler from Statler Financial Services in downtown Sebring. Morning, Phillip. You got data running out your ears this morning, I'll bet you.
Hey, man, on the earnings front, we do, Dave. It's a lot of companies reporting. Some that aren't reporting earnings are reporting some of their other key metrics. So we've got some of those things to look at. And hey, yesterday was a little bit of a mixed day, but you could pretty much call it an even day yesterday, pretty much.
Yeah, by and large, nothing really moved all that terribly big yesterday. Let me set the table for the morning. The Dow ended up 36 points. Hey, that's okay. S&P was up by 3.8 points. That's okay. NASDAQ, that's about as close to flat as you can get, down 2 points on the NASDAQ yesterday. So I'd kind of call it a butt dead even day yesterday, wouldn't you?
Yeah, I would. I mean, it was definitely nothing really moved the needle yesterday, which is okay. You need a pause and breathe day every now and then,
Well,
and
yeah,
then we got one.
We talking heads like the big moves because it gives us something to talk about. But in reality, that stuff, volatility, makes it real hard for the person trying to plan a retirement to make any sense out of it. Market should be looking at a couple 3-point a day change. That gives a plannable and an expectable growth rate that you can actually look at and plan for.
Yeah, it really does, and it makes it easier on us. But that's not the way it is, right? We know there's going to be those volatile days out there.
Oh, yeah, and we could have one today. One never knows. Start out quickly with the macro data that we got in early this morning. Missing some of the stuff that's expected, but what we got was kind of an interesting picture. First-time unemployment claims, the usual Thursday report out. Market was expecting 830 new first-time unemployment claims last week. We ended up getting 779,000, so that was a modest, pleasant surprise. But boy, oh boy, oh boy, the government reports per employee productivity. It was expected to go down a little bit. We were hiring more people, so divide things up more. It was expected to go down by 2.8%, but it was down by 4.8%. Too many people checking out eBay from their office desks, huh?
Yeah, I tell you, that's a pretty substantial miss when it comes to productivity. The jobs, though, I think that was probably a surprise. Less people filing for first-time unemployment claims, which is a good thing, but we're still nowhere near pre-coronavirus, what those numbers were. Matter of fact, Dave, it's been so long, I don't even remember what those numbers were back then when we were at full employment. So
no, don't even. It's just something that's almost so foggy in memory. The old rule of thumb was that full employment, the normal sifting and winnowing of jobs, is around 250,000 people being out of work at any given time. And boy, we haven't seen a number like that in ages, have we?
No, we really haven't. But let me throw this out. You and I didn't talk about this beforehand, but Did you know Apple and Hyundai are very, very close to a car deal? An Apple car, self-driving automobile.
I've got about 87 off-color wiseacre remarks to go off of that. But yeah, the Apple's been rumored to be talking about a car for a long time. Hyundai is going to be their partner, huh?
It is. I mean, at least that's what it's looking like now. And matter of fact, it'll be manufactured, according to news reports, in their Georgia factory.
Now, that would be a good bit of news, something that's hot that could be coming and manufactured right here in this country, wouldn't it?
Absolutely. That would be a good thing. And so we'll have to keep our eyes on that. Maybe that's their next big play, is in the self-driving cars.
Well, they say that the iPhone market is getting saturated, and after this super cycle with the 5G phones in the 12 model, once that goes down, Apple's going to need some next new big idea that might be at something on wheels, right?
That's right. It very well could be. And hey, before you know it, we may be like the Jetsons, right? They were floating around, but maybe our cars will be able to just take us where we want to go.
One never knows. I mean, I'm used to saying, Siri, drive me home. Now I can actually say, Siri, drive me home, and she actually will. We got earnings season going on, and like I mentioned at the top, this is the biggest earnings day of the year in terms of reports coming out of the companies that actually get traded up there. One of the big ones that you and I were talking about before we went on the air was something I've always called the smokestack industry in the tech world, eBay. They're kind of the granddaddy of them all as far as making money off the web, aren't they?
They are. eBay has been out there for a long time. I think they were probably one of the first e-commerce companies really to come out there. And everybody thought it was a weird company back then, and think of where we are today. But they did report they had a pretty good quarter. They beat on both earnings and on revenue. They beat by about 3 cents a share. They even increased their quarterly dividend by 13%. And added another $4 billion to their stock buyback program. So a lot of good things happening there. They're up almost 9% this morning, Dave, and actually they'll open at a new 52-week high.
That's cool. They're one of those companies that's been gradually reinventing themselves over time. It used to be a way for me to unload my junk on the internet. Now all of a sudden I'm getting emails regularly out of eBay selling new stuff as well, kind of morphing into kind of a semi-Amazon type of company.
Yeah, they are. Is where people can sell their own stuff and set up their own little stores like on Amazon, and so it is kind of they've emerged out of what they were, and they've kept pace with what's happening in the whole internet industry.
Absolutely. I'm seeing a lot of interesting swings, and I'm betting some of them are coming off of reports. What else looks interesting out there?
So we had PayPal come out. They reported. It's always interesting to see how well they're doing. They beat by 8 cents a share. Their revenue top forecast as well. Obviously people staying at home through this whole COVID thing, able to take advantage of that by using their PayPal accounts instead of actually tying their regular bank account out there. They're trading up a little over 6%, and they also will open at a new 52-week high.
Cool. High tech is doing well.
It is. So let's flip gears just a little bit now to safety and clean. How about Clorox? I mean, through the whole COVID thing, you could hardly find Clorox for a long time. And so they came out, they beat by 25 cents a share on their earnings, revenue beat forecast, and they raised their full year forecast also from a revenue standpoint. So their cleaning and disinfecting supplies continue to be popular and moving forward. Not sure exactly why this is. Sometimes you just don't know, but they're trading down this morning about 1.5%.
Evidently, they've already figures bleach might be over once that vaccine gets distributed.
So we had a couple clothing lines come out. We had Canadian Goose. They came out. They beat on both the revenue and earnings. They said they had a strong growth in China sales, and along with the surge of online buying. They're on the Toronto Exchange, so we don't really have a update on them. The futures haven't come out yet for the Toronto Exchange, but I suspect that they should see some bump there. The Tapestry, we talked about yesterday the holding company of Michael Kors. Well, Tapestry is the holding company of Coach and Kate Spade and other luxury lines too. They beat by 14 cents a share. Their sales were just a little bit above what was forecasted, not like some of the others we've talked about today. And they're trading up 3.9%, and they could open at a new 52-week high. They're about 50 cents above it right now, but obviously that could change before the market opens up today.
I'm kind of reading pent-up demand in the luxury goods category, aren't you?
That very well could be. Let's see. I want to talk about who's really missing. Qualcomm is, they're the chip manufacturer.
Yeah.
They had a good quarter on earnings. They beat by 7 cents a share. They beat on revenue, but something's not right there. There's some issues about their supply chain coming out, and that's adding some constraints to their sales. So they're trading down about 7% this morning.
I wonder if that's that kerfuffle they got going with Apple, because Apple's going to be making their own chips before long and dumping Qualcomm.
Well, that could be, but it seems to be not. I don't know. I would think supply chain would be them getting their stuff, what they need,
true,
to move forward. So we had Grubhub. You would have thought they would have done well, but they lost 5 cents more than expected. Revenue missed as well. They've been hurt by increased cost of marketing and promotional stuff for their restaurants. I think one of the things that's probably hurting companies like Grubhub is a lot of these restaurants have put together their own delivery service instead of relying on a Grubhub or something like that they can't control. So I think that may be part of it. They're trading down today about 3%.
All right. Got time for one more. What's the favorite one on the list that we got left?
So this one's not they didn't report earnings, but they did report one of their key indicators, and that's Costco. Costco reported their same store sales this morning, and they came in at 15.9% jump in same store sales compared to 11% that they were expecting. So that was good. They're up about 0.9% this morning. Now, I did want to mention this, Dave. We've been talking about GameStop so much. I wanted to let people know where it was right now. So it hit a closing high of $483. Right now, you can buy it for less than $100. It's at $94.10. Still up about 1.8% this morning.
Would have made a killing if I'd sold it short at 483, wouldn't I?
Absolutely. And here's the deal: the 52-week low. You'll love this. $2.57.
Wow. No wonder Janet Yellen is talking about adding some regulations to prevent the meme brigade from messing up another company. Resetting the table yesterday was pretty much flat as we responded to everything by saying, no change. 45 minutes before we opened this morning, Phillip, what do things look like today?
Dave, we were green when I first started looking at it, but since the jobs report came out, we've even increased more. We've got the Dow up almost 0.25%. The S&P 500 is up a little over 0.25%, and then NASDAQ's up almost 0.5% this morning. Russell 2000 is up about 0.25% too today. So everything's looking green right now on the stock index front. Commodities, kind of the same. Well, let me see. I'm on the wrong button here. Let me go to the right button. So it's a little bit of a mixed bag on the commodities front. Gold and silver both trading down a little over, or about 1.3% down. The crude oil, though, man.
Wow.
Yeah, it's up 0.7% to $56 a barrel. I had a couple of my friends asking on Facebook last night, why is gas prices going up? And so I had to lay out the whole. Here's the deal, folks. We are, OPEC's cutting production. We're losing a pipeline. And we're getting increased demand. So all of that puts pressure on oil.
Yep. Plus the fact that they bumped the prices for the Super Bowl in this neck of the woods. So consequently, we get both, don't we?
Well, yeah, I guess so. That's true. Take advantage while you can.
Yeah, a little retail bump up. We got a chance. By the way, the premium stuff, the Brent crude stuff, is bumping its nose on $60 a barrel over in Great Britain. We're looking at an off day on the Asian Rim markets this morning. Not a big one, but a little under 0.5% for the most part. European markets are a mixed bag. Great Britain is down by a little. Germany is up by a little, and France is dead even so far midway through their day. Phillip, it's one of those times where GameStop probably doesn't belong in your retirement portfolio, but you got some guidance for making sure that people do have an idea where they're going for retirement. How do I find you for an appointment?
We do, Dave. That's one of the things that I think that I know I feel like I beat a dead horse a lot of times, Dave, when I talk about risk and portfolios. But I guess because I see so many people that don't have or think they have less risk than what they actually have when we look at what they do have. So, it's important that you know how much risk you have. Give us a call and let us help walk you through how much risk you do have. That's 863-382-0037. Join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And back here on the radio on Light FM tomorrow morning. Phillip, thank you. We'll see you then.
All right, buddy. Have a great day.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Weddings, sports.
Folks, I'd be remiss if I didn't say thank you. Thank you for joining us today. I hope that your week has gone well. As we close out the week tomorrow, join us for the final tidbits on what's happening in the market. Have a great day. I look forward to seeing you guys again tomorrow. Bye now.